What's up, everybody? Hope you're having a good long 3-day weekend. In this video, we're going to be talking about the high five trade of the week, which is Tesla. This is going to be a swing trade. With a swing trade, it's typically anywhere from a couple days to a week or two, usually. So, with this trade, we have the beautiful bull flag here formed. Not just did it form, we also had a breakout on Wednesday, and then we retested Thursday and confirmed higher on Friday. Furthermore, we have our high five trading indicator, which is this green and red line that you see, and basically this is our um, built indicator that I've personally pine scripted to basically align with my trading strategy. And essentially, not just whenever you have a green high five indicator, but when you're also getting this bullish cross, as we've seen happen in the past down here, you typically get this nice run up and a continuation higher. It's a really strong indicator, not just with the high five setup being green, but also with this cross of the smoothing line is very bullish, and you could typically run this higher. Also, this high five indicator is a 9 EMA, so if that gives you any indication on why it's moving the way it's moving. So on top of that, we have a beautiful volume shelf here. And we have a Williams percentage range that continues to make higher lows and has actually formed a Williams consolidation box. Williams consolidation box is my personal strategy to indicate if we're going to continue marching higher on a stock. And it basically helps me indicate when I need to exit a trade because of if we break the support, as you see here, just like if you break support here, then essentially the trade is going to be an exit. So essentially, as you see in the past, we create this Williams consolidation box. And as we stay within the Williams consolidation box, like a crazy person in a room bouncing off the walls, we continue higher. But as soon as we break this level of support that we created, you see this downturn happen. So this is my personal trading strategy on the Williams percentage range that I use to help me indicate when it's a good time to get into a trade up here being bullish, and when it's time to exit when we break this support line. Not only that, if we flip the red, roll over to red on the high five indicator, that's also a key indication to exit. Um, on top of all of that, the only other thing I really can see here is that we have increasing volume going into inauguration on Monday, which will be bullish for Tesla just because of the amount of connection between Elon Musk and Trump. It's no secret, right? So that's going to have a lot of impact and continue impact during this next 4 years. Um, so much so that Elon Musk even has is appointed co-appointed for to run Doge, right? So with all that out of the way, that we know the setup, let's get into the actual trade. So the trade here is essentially you can get in from basically where we are at right now, or you can get all the way in down to the 9 EMA here, about 413 or 408. So basically, we're looking for an entry above 410, and if we engulf over this candle from 3 days ago, 429.80, if we engulf over this 430, that's a good entry area too. So really, I'm not too worried about the specific exact entry because I'm expecting this name to just go higher. So anywhere really in this volume shelf would be a good place to accumulate for this trade. And as you can see, we have this bull flag, and I'm making my first profit target $450, really because of this price gap that you see here, and it's also right here at the start of this next volume shelf, so you have a bit of a gap here to fill. So I do believe 450 is in the cards for this week. I do not believe 488 is really in the cards this week unless we have some very bullish run on Tesla, as that's a 14 to 15% move there. So I would say for this week, an entry in here, building a position. And this week, you could take profits at 450 if you just wanted to get in and out, or you can take small profits here and then ride it up to 488. And then the actual measured move of this bull flag by taking the bottom to the top at this breakout point is actually right up here to 525. So this could take a couple weeks to really play out, but that is the measured move of this overall bull flag. And as you can see, we've already formed the bottom of our Williams consolidation box. So we're already here at the bottom. And then we have all this room to run up to this red barrier, which is essentially the point where we usually get a rejection, which is marked by a red candle or a consolidation to peel back from that red barrier. So with all that being said, again, look for an entry here. I would say you would know this trade is dead if we get back down to under $402. That's when you know this trade would really be dead, because we'd be underneath the 9 EMA and the smoothing line. Most likely we'd be out of this Williams consolidation box, or we'd be rolled over into a red high five indicator or just below the 9 EMA and smoothing line. So that's the trade setup. I hope you enjoy, and if you decide to make this trade, I hope it's a profitable one for you. Thanks. Have a great day.